Hello everyone and welcome to my channel. Today we will be breaking down Bitcoin mining business opportunity. For reference, this video is being recorded on July 13, 2021 and current price of Bitcoin is somewhere around $32.5 thousand. This year Bitcoin has climbed to its all-time high of around 65,000 and went crashing down to the current price of 32.5k. The cause of this has been mainly believed to be Chinese crackdown on Bitcoin mining. Prior to this crackdown, the majority of Bitcoin mining has been located in China, but ever since, the equipment has been either moved or sold overseas. This has caused the equipment to be sold at around 50% discount. Also, the difficulty of the network has dropped significantly, which made it more profitable to mine Bitcoin in the short term. So let's evaluate this business opportunity. To start mining, we need a specialized hardware called ASIC miners. Generally, the older the model, the less profitable it becomes due to advancements in technology. So in this analysis, we're going to use current best Antminer S19J Pro. This Antminer has a hash rate of 110 terahashes a second and efficiency of 29.5 joules per terahash. At its all-time highs, Antminer S19 Pro was reselling for $12,500 on Alibaba. Right now, we can pick one up for $7,000. Plus import tax of 4%, and we will pay $7,280 for one machine. I use the following formula to estimate how much Bitcoin can a single miner mine in a day, considering 24-hour operation. H is the hash rate of the miner. In our case, it's 110 terahashes a second. Small r is reward per block plus transaction fees, which currently totals to around 7.33 BTC. The reward per block will stay constant until the next halving, which will happen in summer 2024. Transaction fees are also pretty stable, so we'll assume 7.33 constant small r, and D is difficulty of the network, which adjusts approximately every 2 weeks, depending on the total hash rate of the network. So if more miners join the network, the difficulty increases and our miner will mine less Bitcoin. Current difficulty of the network is this large number right here. And with this difficulty, our miner will mine around 0.00113 BTC a day. To estimate the future difficulty of the network, I took the historic data, made an exponential fit, shifted the curve to adjust for the current network anomaly, and I got the following formula. T is number of days since Bitcoin inception. Since difficulty is the only variable in our revenue equation, we can project it for the next 3 years, and that's what we get. As you can see, it is diminishing return over the next 3 years. Let's talk about where we can run our business. Location is very important as our only expense is electricity costs, and it varies by country and state. Washington State has a dominant hydroelectric power source which provides cheapest rates in the nation at around 8 cents per kilowatt hour. In crypto-friendly Canada, the best province is Quebec, which also has a dominant hydroelectric power source. At current exchange rates, we'll pay around 6 cents per kilowatt hour. In this analysis, we'll stick to the rate of 8 cents per kilowatt hour. As mentioned, our only expense is electricity. To calculate the power consumption in a day, I use the following formula, where H is the hash rate of the machine, in our case is 110 terahashes a second, and PE is power efficiency for our machine is 29.5 joules per terahash. Putting everything together, we get 77.88 kilowatt hours per day. Therefore, our electric bill will be total to $6.23 in a day. Now let's talk about profitability. That's where it becomes tricky, because to calculate profitability, we need to know the price of Bitcoin, and it's very volatile. I'm going to outline 3 cases. In first, we're going to consider the price unchanged for the next 3 years. In the second case, we're going to use stock to flow price model. That's where the price of the asset depends on its scarcity. Stock-to-flow ratio is also used to value precious metals like gold, silver, and palladium. But in contrast to precious metals, Bitcoin has a diminishing scarcity, which is set by an algorithm. Stock-to-flow ratio is literally means the amount of available Bitcoin, which is stock, divided by the amount of Bitcoin mined every year, flow. This ratio has been shown to be correlated to the price of Bitcoin. For those who are interested to know how this correlation is actually being derived, I will link the article in the description below. According to this model, the current price of Bitcoin is supposed to be around $70,000 and it will go up to around $80,000 before next halving. And the last pricing model is based on logarithmic growth curve, which basically makes a linear fit over the historic price data of Bitcoin. The name might be a little bit misleading because in reality it projects the price to go up exponentially. I'll leave a link to the article describing this in more detail in the description below. According to this model, the current price of Bitcoin is supposed to be around $23,000 and it will go up to $85,000 before next halving. Let's look at operating profit from each pricing model. As you can see, it fluctuates quite significantly. In the third case, you can see that we continue to make profits even in the third year because the price of Bitcoin goes up exponentially. Break-even time is the shortest in a stock-to-flow pricing model, which makes sense because we assume a higher price from the beginning. Okay, let's talk about real net income. There's two more variables that we need to consider. First, we need to consider our initial investment of $7,280 being alternatively invested in Bitcoin and held for the same period of time. Or in the first case, when the Bitcoin price stays flat, we need to consider investing the same amount of money into traditional markets at around 7% interest rate. Secondly, we need to consider appreciation or depreciation of our equipment, which is quite significant. The MSRP of the machines fluctuates depending on its profitability. If the price goes up, the machines become more expensive. If difficulty goes up, the machines become less expensive. So the price of the machines is proportional to price of Bitcoin and inversely proportional to difficulty of the network. Considering the aforementioned, we'll get the following numbers. In the least likely case scenario, when Bitcoin price stays flat, we make 9.88% ROI in the first year, after which it becomes unprofitable. In two other cases, the third year is either unprofitable or very close to it. We'll make a fat 210% ROI in 2 years if the price follows stock-to-flow pricing model. And we'll make 82% ROI in 2 years if the price of Bitcoin follows logarithmic growth curve model. Getting into Bitcoin mining is a great idea if you're a long-term Bitcoin believer and considering holding Bitcoin for a long period of time. It is very risky as Bitcoin is volatile, but if our assumptions hold true, we can make a hefty profit. If this video gets 500 likes, I'll publish my spreadsheet with all the analysis. Well, that's it for today. Like, subscribe, and let me know in the comments below whether you would like to start a Bitcoin mining business.